Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, October 14th, 2024. It's 2:11 p.m. Eastern Time. I'm starting the video, and here's what we're going to do in this one. There's just a lot I want to cover. Been pretty much offline for most of last week due to the hurricane. I'll speak on that real quickly. But getting back to things here, and what we're going to do is keep this one limited to the stock market and the semis, because that is an important sector, especially to the tech-heavy Nasdaq 100, and also the big components that are impact the S&P 500. I'll talk briefly on the financials. Might have to cover those in another video. Key takeaway is this week is probably going to be make it or break. I think the financials, more than anything, are either going to make or break the rally this week, and where the market's been trending up lately, and that's due to earnings. We've got a lot of earnings coming out. So time permitting, at the end of the video, I'll touch on that and go over a few of those charts. And whether I do it in this video or the next, I'll play that game I like to play where when it's earnings season, I'll go through who's reporting the next day or so and take a look at the charts and make a call. Whether I always say if a chart's heading into earnings, it's a complete crapshoot to hold a stock, hold a position when they're about to report earnings, unless the chart is clearly bullish or clearly bearish. Then the odds favor that's the direction it's going to go after they report. So we'll go over that here. So let me just start out. This is what I got out to this morning. I don't want to spend too much time on it, but it is the big picture for me. The same chart I give you back on June 26th. My market top ranges on the indexes, QQQ and SPY. We went up, came pretty close, but not all the way to the top of the market top range, which was where I was preferring us to get close to that, because that would align my price targets, two of which were already hit, with key Fibonacci retracement levels. And so I still maintain these targets, and nothing's changed in my outlook, unless there was something somewhere glaring. Current momentum, current counter trend rallies mean, nothing to me unless a lot has changed in the charts. So if I, back, where are we at? October. So back 4 months ago, almost 4 months ago now, if I thought the market was going to top out here, and so far that's where it's peaked and we're still there, I see no reason to change that outlook, right? That's the technical posture on the long-term charts hasn't changed. Short term, we've had some different developments, but that's all short term stuff. So that's it. So we're still well below that high. If you go to the daily charts, that peak actually came on July 10th. Just a couple weeks, about 2 weeks after I posted that market top range. We got up in there, and then it was followed with a bearish engulfing candle the next day, which we remain below. We're kind of pushing the envelope, as I got out to you this morning. As I said before, I left town. I had to evacuate, but as I said before, I kind of went away from my desk before the hurricane. We had a gap right here. And I said, ideally, I really want to see this thing stay down below there. And that's, so far, we're stalling out. I'm talking the big gap that came shortly after the top, a few days after that bearish engulfing was put in. So we backfilled that gap. We do have, as you can see, I noted before I left town, I did leave town to evacuate, but before I had to shut down and then come back and do all the cleanup from the hurricane, we had a little divergent high in there, had a little correction. So this is just simply an extension. This is, again, that 60-minute chart I got out today, meaning we had divergence, we had a correction, and the divergence was not reset. So that's when you see the difference of DH1, DH2. It's just the same divergence from this starting point right here has continued and grown even larger. That was its own standalone divergent high. It was reset after that correction there. This was a similar, very similar technical posture. Here, I'll draw it out for you, so we'll get off the busy board. You had divergence building here on the indicators. It goes to the left here. So you had the divergence building from that point, and that's not my line tool, but I think you see what I'm doing. That was DH1 correction, bigger divergent high, DH2. So that's kind of what we've got going here. DH1, DH2, a little shot across the bow before the top was in. and that's what we had there. So there was my first divergence line, second continued on there, and then the drop. So there's a technical posture, and you know what to do if you're trading the indexes right now. It depends who you are, who's asking, how you're already positioned, if you have any position. You know, it's been a great swing trading market, long, short, long, short. We've had a lot of trade ideas, long and short, many different sectors, different commodities, different asset classes. Bonds, for example, I just covered that. You know, that hit the target, I think, on Thursday when I was out, and today I said, no, time to go long Treasury bonds. So yes, you can short a rally into resistance. The top of a gap is resistance. Traders will almost always, you know, look at gaps, and you can see the first time we got there, we had a little pullback, and we got in the gap a couple times. We were rejected, and now we backfilled it. So that's number one. But you know, there's been quite a several, at least, bullish technical developments, including and not limited to the breakout of that downtrend line there. So you know, I'm lukewarm. Earnings are coming up. Good time to maybe sit back and wait for that next sell signal, which I said would be a break of that minor trend line, and then that more significant secondary uptrend line there. Maybe, you know, starter if that's your thing. If you're bullish and looking for a breakout, you know, to new highs, you'd want to wait till this gap clearly gets taken out. You know, that the top of the gap there, and then you have that high right there. So that's it. And as I did say earlier today, I'm going to go to the daily chart here. So should we push up and go to all the way to the top of my market top range, which is not much further. It's about another 2.5, roughly 2.5, a little under 3% higher. In doing so, and it doesn't guarantee it or a reversal, but it does guarantee if it happens soon, it's going to be simply DH2, an extension of the previous divergence that was in place here at DH1 when we had that drop right there. We came down to the 200-day moving averages, hit T2, bounced as expected. We covered in reverse, went long there because this is, you know, how trades play out. I list multiple targets because upon the initial tag of each target, a reaction's likely. And as these trades get going, I will tell you which ones I plan to hold and which ones I plan to, you know, cover and or reverse on for short trades, vice versa if I'm trading long and they're upside targets. So that's it in a nutshell. We're really in the same technical posture that we were all the way back in late June, early July when I was looking for the market to top in this range. And if anything much above that, you know, it's 511.74 is when the number will round that up to 512. So anything much above 512 has a couple things, but most important, it has the potential, and I'm back to the weekly chart, it has the potential and will, if we go high enough, to take out the divergence. What does that mean? When you start moving up, the PPO and the RSI start taking out their previous reaction highs, you no longer have that negative divergence. But right now, we have it on all my swing and trend trading time frames, which are the 60-minute chart right here that I started with. The daily chart, well, we had a divergent high there. We'll have it on an equal or marginal new high all the way out to the very significant weekly time frame as well. This is that weekly. Oh, even the monthly, guys. And rarely do you get positive or negative divergences on the monthly time frame. And when you do, if they play out for a trend reversal, they indicate a much powerful trend reversal measured in months, if not years. So the big things on that, and again, this will not happen today, tomorrow, or next week. Anything that happens on this chart, this monthly chart, all that matters is how you close the month, because that's when the candle's finalized. So there's that beautiful uptrend line for the 2023 lows right there. Actually, it was roughly a double bottom in the beginning of 2023, also October of 2022 right there. And so that's where that trend line comes in. There's your prime. This is your primary uptrend line for this trend. And this was that correction. We gamed, covered, bounced. And that was an intra-month break. See that skinny part? We call that the shadow of the candle there. Or when the shadow is below the body, you call it a tail. When it's above, you can call the shadow a wick. And that would tail means that we intra-month went below there but closed solidly above that uptrend line. So it's a pretty well-defined uptrend line. And if you are a 401k investor or long-term trend trader, this would be a kind of get out of Dodge moment, or at least maybe take out some of your long-term monies in index funds, and then even better when you take out the 20-month exponential moving average at this blue line here on a solid monthly close right there. That's when our sell signal came. It's a great trend indicator to define bull and bear markets. You can see it here. This was a bear market, 2008 to 2000, or no, the dot-com bubble broke down in 2000, and we regained it there. It said you were in a bear market here. Told you were, as you were all along here in a bull market. Kept you long and strong. Got you out and turned around and let you profit short on the great financial crisis. And then it's stayed above here until really right here when we had that bear market or first leg down, whatever you want to call it, back in 2021 to 2022 right there. And then that's where it's recovered. So those are the big levels. I don't update this very often because all that matters is how you close again in a month, and we haven't had any signals, sell signals on it for a while. This is the primary uptrend line as well, off the 2008 lows, that defines the secular. Even though we had, COVID was a bear market by, the old school metric, a drop of 20% or more, 31% drop. We had a 24% drop there in the Qs along the way, 26% from high to low. But this is kind of the lights out number, and will tell us that we've most likely entered a new secular bear market. Remember, this is a secular bull with cyclical corrections or bear markets within it. And so those are your three levels to watch long term on the monthly. One, the uptrend line off the 2023 lows, early 2023, late 2022. Second would be that 20-period exponential moving average on the monthly chart, and then that trend line there, okay? And then that increases the odds that we're going to go down to these deeper targets that I laid out all the way back in late June. So there's a pretty thorough update on what to watch, near term, short term, 60 minutes of short term stuff. And let me give you SPY real quick, because I also gave you SPY back in late June along with NVIDIA. And so this was it back in June 26th. Give you the market top range here as well for SPY. Going into the Fed meeting, it was back and forth whether we were going to get 25 or 50 basis points right up to the day of. And I said if we got 50, that's probably going to pop SPY above the midpoint of my final market top range again, which was right here, and which we did. And I said it would take us up probably towards the upper half of the range, the top end of the range. And so we're there. We're pushing the top end of the range right now. So pretty much we're not a lot of upside for this call to prove right. The call back from late June right here. That's it. So we're still in that market top range. Fibonacci's we've got it moved up to the top there. Either way, those remain the targets for the S&P. And the S&P now, and I'll segue over into the, I'll do the financials at the end. Just keep in mind, the financials impact the S&P 500 much, much more. There's hardly any financials in the NASDAQ 100. It's virtually a financialist index. It's got a lot of tech and biotech and other things there. But let me do the semis, since we're talking Qs are the big index for me, the one to watch. And so most recently, this is a daily chart. I just happened to toggle over to that. I have different boards here, but you can see we put in a divergent high and a bearish engulfing candle back then. That followed the breakdown and back test of this wedge right here, breakdown back test. Divergent high bearish engulfing is a reversal stick, indicates the end of an uptrend if it's a bearish engulfing, and so far that's what that is. Big resistance there at 242, right? And we're right up on that now. So it's kind of a make it or break it time. Now, look, unless they take out the bearish engulfing in the highs, I'm going to treat that as the high that it most likely is. And then on a shorter term time frame, was it the week before last? Threw out a new trade idea on SOX, a semiconductor sector ETF. I'm trying to recall. I'm still getting caught up. I know it was shortly after this divergent high right here. And then we hit that first target there. Remember, multiple targets are listed because upon the initial tag of each target, the odds for reaction are elevated, and that's exactly what we had. So far we're back to where we started. So this trade's still very much in play right now, and that would be T2 and then T3 down there. So we've got some semis coming up reporting this week. Didn't go all. I went only a couple days forward. I can't tell you if it's enough to move the market yet. The ones that are reporting, some of the smaller ones. I'm going to get to the earnings again, probably in the next video, if not this one. The upcoming earnings in the next day or two. So what we need to do is, you can see here. So we had that breakdown of that minor uptrend line there. Quickly hit T1, and then we have this secondary trend line right now. It's pretty well defined. And so a break of that trend line will most likely open the door for move to T2 because we already hit T1. It was support. That's why I had it there as T1. Still is support, especially now even more so because we had another reaction off it. That helps to further validate it. So we could certainly have another reaction or not. The way I look at these, once my the initial tag of one of my price target opens a door to the next target. So wouldn't surprise them if we bounce once more because it's resistance, nor would it surprise me if we went down. So my preference would be to just maybe sit tight, hold out for T2, T3 if we reverse. And I can't remember where. I'd have to look at where the suggested stop was, I think, based on the entry on this trade. But either way, it still technically looks good. Oh, this is the divergence line down here. So all I'm going to do is take this line. So when I updated the chart today, I put it there. We just slightly higher high, and the divergence you can see here. I'm just borrow that line, still very much intact. Let me move that down. There we go. Okay, so that's your update on SOX. That's what it was like on the daily chart there. And then let's just rifle through. Let's take this video home by looking at some of the individual semis. Remember, some of these are reporting soon. Some aren't. This is NVIDIA. NVIDIA took out that downtrend line. Let me go to a 60-minute chart. This is the downtrend line off the highs. We've been in and out, in and out. We've had long and short trade ideas on this one since the highs here. Swung it down T3. Covered actually after it undercut that in the morning of that low right there because it opened a gap down below it. Reverse long there. We went up, divergent high, divergent low, swing, swing, swing. This has been probably one of the best swing trading stocks all year because of the gains and the rallies within each of these trends are huge. And so most recently, this was my most recent reshorting zone. Get back in short after going long off that divergent high and then that breakout. And as I said before I left town, no go above that level. That's no go. And any move above there would be a stop. So that's what's the suggested stop on this trade. So consider it a new trade as I got out to this morning. If and when this bearish rising wedge breaks down, you've got the negative divergence, very much so. It's watch, rinse, repeat. Guys, simple stuff. It either plays out or it doesn't. So I don't want to oversimplify. There's no guarantees to this, but divergent high, drop, divergent low, rally, divergent high, drop, divergent low, rally, divergent high, drop. Oh, I'll pause it there to sneeze. Hopefully got that time. And that's it. So like I said, the fact that it's taken out this downtrend line, that was a near-term bullish technical catalyst. No doubt about that. And it may be the real deal. But if not, what you want to see is a failure back down below that trend line there. So also that's a price target. So if you're wondering, if we do break down the trend line, I don't think I laid out price targets for that would certainly be a price target. Even if you're bullish, you want to see maybe a back test of that trend line. And if you're bearish, you want to see that level fail. Again, the video was also on the same time given out to you as a trade idea on the June 26th with the long-term targets, which we already hit that first weekly target there, bounced. And so that's how it works. We had a short entry on the bearish engulfing candle on the top there, went down, hit T1, we bounced. This is how this trade's likely to play out. T2, T3, and T4, still the final target at this point in time. Alrighty, but you need to, like I said, ideally fail back below. If you look at it this way, it's a very simple view. Also, you've got the same downtrend line there. You can see the uptrend line on this 60-minute chart, little symmetrical triangle pattern. So this is what you need to do. Fail the break out of the trend line, and then fail the break below that uptrend line there. And that's what is that? Just a different board on the 60-minute chart. All right, let's go through some of the components here. So I'm in SOXX. I have my component list to the right. NVIDIA being, here, I'll show you right here. You can see on the right side, NVIDIA being the largest. Taiwan Semi's number 2. So I'm just going to rifle through these quickly and show you the technical posture. We'll look at 2 time frames, daily and 60-minute chart. There's Taiwan Semi on the daily. I'm sorry, 60-minute chart. If I forget to mention, I'm going to be toggling back and forth. You can see it right up here in the upper left-hand corner, as well as on the top of the screen, the time frame I'm working off of there. And so watch, rinse, repeat. Divergent high, trend line break, came in the form of a nice gap. Love those gaps. It traps the longs, doesn't let the shorts in, and then you get the big drops after those. Those are beautiful signs, beautiful sell signals when you gap down below a trend line like that. Divergent high 1, correction 1. Divergent high 2, it's not labeled as such, but that's what it is. It's simply an extension of the same divergence. Sell signal is going to come there. It's not mere coincidence. This trend line mirrors NVIDIA. Birds of a feather flock together, so you see a lot of similarity in these charts because there's massive indexing in, buy programs fire off. They're one day, one good news on one semi, they all rally. Next day, bad news on one, they all fall, or just inflows, outflows. Oh, wait, let me go back to the daily, or toggle over to the daily. There it is, the daily. There's your uptrend line off the lows. Pretty much a equal, an equal high, that is negative divergence. It's the same divergence we had in place right there when we shorted the semis last time. Taiwan semi fell, and it was a big bearish engulfing candle. Beautiful bearish engulfing on July 11th. No coincidence. That was the day QQQ put in the bearish engulfing. Fell down into August 5th lows. No coincidence. The day we covered all shorts, went long. That big red candle at the lows. No coincidence. It hit the 200-day moving average. This was all covered then. This is swing trading, guys. Short here, cover there, bounce. It's time to get short again. That divergence that we had in place didn't go away. It only grew larger now. It's the same negative divergence. It has not been reset. Reset would be if the oscillators didn't have it anymore, went on to make new highs. So there it is. We just need the catalyst now, which is a breakdown below the trend line. Broadcom, same thing. Divergent high 1, 2. Third largest component, minor trend line, looks the same, right? So these are all sitting right on a trend line, most of these stocks. Many of those have pushed back to where they were before. Some have not. That's one thing I'm looking at. AVGO, again, it was a beautiful tag. We'll highlight it here on August 5th at the lows. When we hit the 200-day moving averages, highlighted it again here, it hit it again. And that's the big level. This is lights out. When the 200-day moving averages are taken out, the stock should open up and fall quite a bit. But as of now, that's not going to happen until this trend line goes first, right? And then this, support level, one after another. ASML 60-minute chart. We had a divergent high recently, and I just take the lines. I simply extend them over. And now we have a divergent high there. That's a 60-minute chart. That's what it looks like on the daily. One of the better looking ones. I think I mentioned that recently. I went through the semis, and some actually are looking pretty decent with divergent lows. Big resistance right here. If it can power, and the 200-day moving averages. So although you had this divergent low, I think that's probably it for the stock. You're going to get those divergent lows even in a bear market, and they're going to be good for tradable bounces. Again, we're swing trading here, trend trading, not investing. Sometimes I'll throw out long-term themes, but you can get in if you're an investor. A swing trader, and you can get any or all of that 18% bounce. Great, take it. And then turn around and short. I can tell you right now, it's at the 200-day exponential moving average with the 200 simple just above. Turn off all the lines. I don't know about this one. Yeah, almost all these tech stocks, the 200 days do a good job at defining bull trends. When you're above them, it's bullish. And when you break them right there, get out of Dodge, bearish, new bear market started. bear trend. And then when you recover them, bullish, and you want to buy pullbacks to them. I broke it there. It was a whipsaw. Well, you didn't, that's not perfect. And maybe this will be a whipsaw, maybe not. All I can tell you is go back as long as you can go back. And, you can trade a lot of these tech stocks simply, position or trend trade. Whether they're above or below their 200-day moving averages. And then, what's the trade? The trade is once you're above, you buy pullbacks too. And then when they finally go, you short or get out of your longs, and then you sell rallies back too. So that's all I can do is point out objective levels. Can't guarantee which way it's going to go. Always give you my thoughts if I have any strong thoughts on this one. Yeah, I think we'll, get rejected anywhere here up to the 200 simple, which is a little bit above. I'm going to go through a few more, not all of them. It's kind of the same thing. AMD, let's look at a 60-minute chart. There it is. So common theme, I don't have it marked up here as such with the annotations, but that was a divergent high right there, followed by that drop. Oh, first we had a divergent low here, you can see. Rally, divergent high, correction, divergent low, rally, divergent high, correction, divergent low, rally. You get the point. And then you had an uptrend line to break there, sell signal. You had a little divergent low there, rallied here, divergent high, you had a correction, small one. And all this is simply an extension of that previous divergence right there. And so there's the current technical posture. So yeah, there's been the current uptrend in the semis has been bullish, but a lot of these have peaked when you go through them. Just to rifle through the rest from a daily here real quick, guys, and then we'll wrap the video up or move on to the next thing. So divergent high, bearish engulfing candle, and island cluster top. A lot of, you can't ask for more, better, signs of a top, all and round in close proximity. And this stock is still off its highs today, about 26%. Go down, Qualcomm. This one has nice resistance. If you are bullish right now, this one is one of the best looking ones in my opinion, because you have this very, very well-defined resistance here, about 176.50. You can see it's pushing up against now. And if it pops that, you got a thin zone, and this one could run. However, it, like many semis, put in a divergent high, an island top. It's a reversal pattern, and you can't say it didn't work because the stock fell about 34%. The million-dollar question, is that it, or is there more to come? So if it is just a bear market rally, this breakout's likely to fail, and then you go down to the next level. I'm going to put a little line here, a little minor uptrend line. So you have this, if you want to trade this one, what I see here is a ascending triangle pattern. You have this uptrend line off the recent lows, early August, it's probably August 5th lows, and then that price level there, traded as such, bullish if it breaks out and holds that breakout to the upside, bearish if it breaks to the downside. And on a weekly chart, again, big, coming off big divergent high. This was, I always try to make a point to keep looking at the big picture time to time, because it's easy to get lost in the what I say in the 60-minute charts and the intraday charts and even the daily charts. So there's a little uptrend line off the lows right there. Possibly not a lot of reactions, but I'm going to put it there. And so that was a big divergent high on the weekly. And these are my weekly targets. I gave you these back a while back here, all the way back in 2012, 2023 right here. And I still maintain those targets. Just have to take out this trend line. Remember, we put in back here, bullish falling wedge, divergent low, and a breakout right there that ran. Texas Instruments, let's go to the daily. Let's stick divergent high 1, big drop, double digits. Divergent high 2, drop so far, still below there. Applied Materials, chip equipment maker, also nice level right here. So these guys are all in kind of a make it or break it. If it pops that's about a 240, almost 215 we'll call it. You can see this one's below its primary uptrend line right here at a divergent high right there, bearish engulfing candle, minor trend line break, nice sell signals. Took out the primary uptrend line off the October 2022 lows right there. Made a perfect back test, rejected, and it's still below there. So if it pops 214.63, any back test is still going to be or offer you an objective short entry or add-on. This one's also coming off that divergent low recently. So that's it, guys. The common takeaway is a lot of these guys, these stocks, these semiconductor stocks, are at resistance on pretty good resistance on the daily time frame. And if they pop those resistance levels collectively, the majority of them, they have the potential to burn through those divergences on the 60-minute chart. Otherwise, if they fail here, in the ones that I covered, especially the top components, remember, that's why I do these videos. I always start out with these, and I'll go through my watch list. I always have my watch list sorted by market cap, you notice. So the bigger ones that I cover first have a bigger impact on the sector and the market as a whole. And so I go down the line, NVIDIA being 3.3 trillion, you get to the bottom of the holdings of SOXX. Wolf is only a $1.2 billion company. It's still a good-sized company, but pales in comparison to the impact that NVIDIA has on the market and the semiconductors as a whole. So I'll probably just stop it there. Let me just rifle through a few more. Micron, ADI, see if anything stands out. KLAC, another chip equipment maker. Big old gap right there. It's testing. So this is the common takeaway, guys. The semis are right now, I'm going to put a line there. And why did I do that again? You can see I already had the gap there before, that purple box. I just dragged it along. So you can see when we gapped there, we got rejected, near rejection. We're there again. Bullish if it can break that. Then you have the top of the gap. Bullish if it can break that. And if so, we could see a multi-week or multi-month rally. And if it does and it equals or makes a slightly higher high anytime soon, it will be a divergent high. But again, you have to say, do you want to ride that out? And just because it's a divergent high doesn't mean it must fail or it will fail. But that hasn't happened yet. What has happened, I can only tell you, we put in a bearish engulfing candle here. That has marked the top all the way back in July. And unless all those bearish engulfing candles and a plethora of evidence of a top that I see in the semis and the NASDAQ 100 for that matter, until those are taken out, I'm going to treat them as such. And I'm treating this as a counter trend rally, trying to be as objective as I can and unbiased looking at the charts, recognizing that these were the 200 days that I was calling for a pullback to when we were over here in the markets and just about everything. And you can see KLAC, like so many stocks, when you're in a choppy trading range, that's when you want to stay away from trying to figure out what's going on with the 200. Sometimes stocks or the index markets will consolidate. But once you start trending, it's those clear bullish trends and bearish trends that the 200 days do a great job of acting as, trading instruments by providing objective pullbacks, cover shorts like we did on August 5th when they were hit, and go long because we were in an uptrend. We were pulling back to the 200s. Likewise, whether it is a week from now, a month from now, or a year from now, when we take those out, then we might be looking to short rallies back into them. Oh, here's another one that could run. Lam Research is coming off a divergent low. See that positive, aka bullish divergence here at the recent lows. And it also has a resistance level there about 8660-ish. And the 200 days. It's testing right now. It's testing the 200 exponential. So again, glass half full, glass empty, whichever way you see it. If you're a bear, you can see a rally back into the 200-day moving averages. Anything here is an objective add-on or new short entry. Likewise, if you're bullish, you do want to see those taken out. Wouldn't really be objective to go long right on the 200 days, but you could make a case if it pops that 8660th level there. So that's it. The kind of the takeaway is we're at a kind of a make or break it moment right now for the semis, at least near term. If they can all pop up above the current resistance levels that so many are testing, then that should open the door, give you another leg up, and maybe even then flip the charts to even longer term bullish if all you see collectively the majority of these stocks take out, get back above the 200-day moving averages. And I'm talking, I use both the simple and the exponential on my charts. Last one I'll go to here is Intel, because that's also an active trade idea. We had it recently. It was a trade idea here on the daily chart. We went long here, highlighted again here. That was long-term support on the weekly chart, which I'll just show you. That's right here. Very good long-term support level right there, 1930, big divergences. We ran up, we hit that. I think it was a 30% gain. It was a sold target I gave you, and then recycled back in recently on the pullback to that same level that it was initially on the daily chart that I gave you that previous trade. That's the $22 resistance, and that was that trading range. We broke out, hit the target, and then we were able to sidestep that nice give back there, or turn around and short it if you reversed. Get about a 12% drop, and then re-entered. So still looking good. That's as long as it holds above the breakout point. That was the breakout point. That was our entry point right here for the new trade. T1 was already hit as it covered. T2's right there. And depending on how things go, potential means I'll look at the charts at the time. Let's say, for example, I just covered the top semiconductor stocks, about the top 10 or so. If the majority of those break out above those resistance levels we were at, the Qs hold up, we see some good earnings, especially if those 60-minute divergences get burned through, yeah, I'll probably extend this trade. This is one of the few things I didn't close out or get stopped out of while I was out away from my desk from the hurricane. I had to set the OCO orders like I do on the positions that I decided to keep. So I'm kind of working with a lot of very few positions right now, but I'm trying to get my bearings on what happens next, and that segues into the financials. And I will do this in a separate video because it's worth noting. This is XLF right here. What I'm doing is I didn't mark the 60-minute chart up yet, but I noticed we have quite a bit of financials reporting this week. I'm going to show you that in 1 second. I'm going to play around, move this trend line, and show you here on the 60-minute we have divergent high. We've been stair-stepping higher, but every time we get these divergent highs, we get these corrections. The last time I gave you 4 targets here would have been, I believe, on a break of this level here, that wedge. We hit T1, T2, T4 is down here. So if the entry point, I'm going from memory, was on the break of that bearish rising wedge, sometimes I even throw some of these trade ideas out in advance before they even break down. That would have been an 11% for target. And we're only up about 3%. So within a reasonable RR. Again, I can't remember if this was an official trade or if I gave you a stop on it or where it was on the daily. Let me see here. Daily, do I have targets? Again, guys, I'm trying to get my bearings. It's been a heck of a cleanup process since this. Well, actually, I was still finishing cleaning up from Helene. We got hit pretty hard. I was going to talk a little bit about that. I was in a mandatory evacuation zone. We live on just inside the mouth of the Caloosahatchee River, which is in Fort Myers. And so we were in one of the mandatory evacuation zones. I actually would have stayed on this one, but the wife was really, really worried, so we did have to leave town. Came back. And anyways, the cleanup, this one was just slightly worse than Helene. We did get the surge, flooded the yard and the dock and all that stuff, and almost pushed the boat up and into the top of the boathouse like Hurricane Ian did 2 years ago. So it's been a crazy 2 years for Fort Myers. We've had 3 pretty much direct hits. We were on the southeast quadrant of the Hurricane Milton here, as well as Helene a few weeks earlier, and that's where the worst winds are and the worst surge, especially on the west coast of Florida. So that's our big thing. That it was again. But anyways, everything's good now and back online. I will get into this a little more. I'll do a separate video, but what I wanted to show you is we have quite a few. This is the earnings calendar. You can access that on the site. If you go to click on resources up here, and then when you come in, go tools of the trade. Earnings season is now fully underway, so you want to check that, scrub your positions, whether you have current positions that you're holding, especially if you're an active trader, swing trader. If you're an investor and you're in it for you don't need to be doing this. Listen to if you're a long-term investor, just ride it out if you have a trading plan, that is, and you're going to have wider stops going into earnings because you can get shaken out. But for swing and trend trading, you should know when your positions report and the positions that you're considering taking. So I rifle through these videos. I throw a lot of trade ideas out there. I try my best to point out every little detail, nuance about the trade, but sometimes I might not mention, hey, it's going to be reporting soon. I'm usually pretty acutely aware of that during earnings season. So check that. There's the economic calendars there as well for you. But let me show you what we have coming up this week. And then I'll touch on these in the next video. I'll cover some of the financials, but you also have UNH, United Healthcare, and I'll do the I'll go through those and I'll tell you which way I think some of these are going to go after earnings. But look at this, Bank America. This one, Walgreens Boots Alliance, is worth watching too. That's obviously not a bank; it's Walgreens. Citigroup, Goldman, Schwab. You have Johnson & Johnson reporting, Progressive, then PNC, another big bank, State Street, another big one. So you can see banks galore. That's just tomorrow morning. As we go through the week, this is Tuesday, tomorrow after the close. United Airlines, Interactive Brokers, JB Hunt, big trucking company, Pinnacle Financial, some more financials coming up. ASML, there's one of our tech semis right there. This is toggle to Wednesday. You can see as I click, we're going to Wednesday now. Before the open, Morgan Stanley, Abbott, Citizens Financial Group, Synchrony Financial, USB, that's US Bank Corp. So you could just have a ton of banks reporting this week, and that's going to set the tone, I believe, and kind of make or break the rally. Oh, look, Taiwan Semi coming up Thursday before the open. Travelers, big insurance company, Huntington. So you got a lot of regional banks as well as bigger banks reporting this week, and then other non-bank financials. You got Blackstone, then KeyCorp, another bank. So that's what I'll do in another video, kind of share my thoughts on it. In a nutshell, I already touched on financials briefly, I believe, but I know that we had JP Morgan set the tone positively, I believe, last week when I was out, but I think we'll see things go the other way based on the technical posture of these banks. Again, I'll cover it in a separate video, but KRE, the regional banking sector ETF, is right back to that resistance shorting zone that I covered here. We got that pullback, covered it here again. Now, so that's what I'm saying. Just like the semis, this is make it or break it. Look how well, remember, this is back here. I created that shorting resistance zone all the way back here when we were rallying up to it. And we got rejected off it. Then I highlighted here again. We got rejected again. I highlighted here again. We rejected again. That's where we're at. So we're back to a really nice resistance, and it's similar. It's not as well defined, but it's almost similar to that ascending triangle pattern I pointed out earlier. So that's it, make it or break it stuff. And I will say, if the initial reaction is positive, the thing about earnings is the initial reaction, not just the day of or the morning of or the afternoon of reporting. It's over the next couple days. Sometimes it takes a couple days for the market, usually 2 or 3 days, with certainly under a week, for the market to fully digest what they reported. And so I could easily see any pop anytime soon will simply extend the existing divergence. Remember, we had divergence here. We got that drop. That was DH1, divergent high 1. Any marginal, but it has to be marginal, just slightly above there, will keep this divergence intact. Anything much more, it starts to change the technicals. I'm going to have a hard time making a case to short the regionals or the big banks and the semis. Like I said, if these things start to, these divergences and other, resistance levels and things like that get taken out. But as of now, that's where we're at. And I'm going to wrap the video up here, and then I will do a deep dive in the financials for you in the next video. And if you don't want to watch that because you're not interested, this is what XLF looks like, just so you know. We had a couple banks that reported already and gave us a little marginal new high. just slightly above there. Still has the negative divergence, and there's an uptrend line in which to watch. So how the rest of the banks report this week, again, the majority will be out of the way, at least the big ones, and then we'll know, is this the real deal? We're going to continue on up, or are the financials going to go down to those deeper targets I gave you before down here, XLF. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.